Hello, California, and welcome to this week's edition of Your Financial Compass, brought to you by the team of Bulman Wealth Group. I'm your host, Kristen Oakley, and I'm joined by financial advisors Scott Valan and Sean McAmoyle. We're so glad you're joining us this week. This show is dedicated to you. We love being able to talk about the subjects that we know can make a difference in your financial life and potentially put yourself in a better financial position. Today's show is called The Advisor Advantage: Why investors who work with financial advisors can potentially do better. It's going to be a great conversation, and we're so glad you're here with us. Scott and Sean, I'm so glad to be here with you, as I am each and every week. How are you doing?
Fantastic.
Yeah?
I always wait to see what Sean says and I'll respond.
Ready to rock and roll?
Yeah. I don't have anything stupid to say, so.
All right.
Or smart to say. Sean said pithy. Sean said you usually say something pithy, and I had to look that up because I actually didn't.
That's a word that you don't hear often, but yes.
It's probably a backhanded compliment of some sort.
Well, you guys love to rib on each other, but
That's
really
true.
At the end of the day, I love that the family team dynamic that you guys have created at Bulman Wealth Group. I know you like to have a lot of fun, and we hope that you enjoy the show as much as we enjoy doing these shows with you. But yeah, this conversation of, do advisors bring value, right? Is it worth working with somebody else? Because there are a lot of do-it-yourself investors out there, and maybe you yourself have been a do-it-yourself investor. But the question is, should you really be doing it on your own? And that's what we're going to talk about.
To quantify the value an advisor can bring to a relationship, I think is really important. It's kind of the elephant in the room in many ways. And I think what we try to do is hit it head on, because it's the basis for why people choose to work with us.
For sure. So, there's so many different directions we can take this conversation in, but let's start with the value, because it's so much more than just picking stocks or managing the money or investments, right? Talk a little bit about the misconception that's out there about what financial advisors are actually doing.
Well, Sean gives dating advice. I bet a lot of advisors don't do that.
Successfully.
He partners up various clients. It's really magical. So you think of it in an analogy. It's like a rock band. Hey, I'm going to start a rock band. I play guitar. Do you sing? No. Do you play drums? No. Do you play bass? Well, you don't have a rock band. It's kind of the same with investing. We don't just pick stocks and let it ride. That's not a financial plan. We're financial planners. There's other things that we have to factor in, like retirement income planning. Where's the money come from? Tax management, in terms of, are we paying more in taxes than we need to? What accounts do we pull from first to be more tax favorable? Things like risk management when it comes to health expenses or getting health care coverage. What about legacy planning? Do you have everything titled properly? Do you have a trust in place, especially here in California? There's all those, and then obviously investment planning. There's all those other factors too, at least when it comes to our approach to financial planning. It's not just, here's your investment, we'll make it grow hopefully. It's everything else surrounding it that just plays as big of a role.
I think what Scott said was really important, the things that he laid out. 1, income planning. 2, tax impact. 3, healthcare or risks to their money, their portfolio. Legacy and estate planning. And then investment plan. It's almost, we like to say it's almost committing malpractice if we went right to the investments. And
right, and why is that? Explain why that is.
Well, that's the fun part.
Yeah, it is. We like to talk about that. It's the fun and sexy part of what we do, growing people's wealth.
Right.
But if you don't really understand it's like going to the doctor and getting your vitals taken. You don't walk into the doctor's office and get prescribed medicine. They take your blood pressure, they check your weight, your height. They ask you
your birth date for the 100th time.
Ask about your medical history. It's only then can they recommend and prescribe the right medicine.
Right.
And I think that's how we feel about the investment recommendation. It comes last.
Well, and I think what's interesting is there's a lot of folks out there that will throw around the term financial advisor, financial planner, but really all they are doing is the investment management piece, because that's how a lot of our industry is set up, right? But what you've laid out is what a financial advisor and financial planner in the comprehensive, holistic sense, which is what you all do, which is what separates you and the team of Bulman Wealth Group from someone who's just purely an investment manager, is you are able to add that additional value. Because I think sometimes folks who are do-it-yourself investors think, why should I pay a financial advisor? Why should I pay a fee to do something I can do on my own, i.e. manage my investments, right? there's so much more value that's provided in the context of a comprehensive planner.
That's right. Well, the behavioral part of it too. I mean,
Yeah.
the do-yourselfers can certainly do the research. They can select the right investments. They can make changes to their portfolio. But when things go wrong, it's hard to counsel yourself from making bad decisions.
Well, we're too close to our own stuff, right?
Yeah.
Yeah.
And that's one of the things I think that we always say that we bring to the table is perspective. The fact that we work with hundreds of clients, whatever our client is going through today, we've worked with tens, hundreds of clients who have gone through the exact same situation successfully. Some have made mistakes, but we can share that perspective. And I think there's tremendous value there.
Yeah,
And there's time. You always hear life is short, especially as you're entering retirement. You have less years than you did just because of your age. And I met with a gentleman recently. He's been a DIYer for 30 plus years, done exceptionally. And now he's like, I want to retire soon. I don't want to deal with this anymore. I want the time. I don't want to look at spreadsheets anymore. I don't want to be on a vacation somewhere and be looking at the market panicking. And that's another thing we can bring to the table. Sean says this all the time. We do this full time. Most people do this part time. That's okay. You know, I can cut the grass. I don't always want to. Maybe I'll hire the neighborhood kid to do it because I'd rather use that time doing something else. And this is a lot more important than that. So it's just sometimes the time and stress reduction that we can bring to a scenario is an intangible value as well.
Oh, for sure. Because to your point, to do it well, you have to be looking at the markets all the time, right?
Yeah.
And so I think that's a valid point, that there comes a time when maybe someone has done it themselves and they've done a good job, but it could be time to transition the reins.
Yeah. I mean, we tend to, in this conversation, de-emphasize the importance of investment selection, saying that, you know, do-it-yourselfers can do that well. But there is value we bring, I think, to the investment selection at a certain point in people's life. You know, for a lot of people who are in the wealth accumulation part of their life, they can contribute for decades to their retirement plan, their 401ks, their IRAs, and be very successful at it. But there comes a point where they have to shift from accumulation to distribution, monthly income. How do you take this pile of money and turn it into a monthly predictable paycheck? And there are investments that pay predictable monthly income that the average investor is just not really aware of, and they're shortchanging themselves and their family, and they're really missing out on some really good investment opportunities.
And another aspect there is, I think too many times everyone's just focused on the returns. What kind of returns? What kind of returns? What kind of returns? Positive way.
Right.
You know, positive returns. Well, 3 out of every 10 years in the market's negative. I would argue just as much as like, hey, when the market's down 10%, what if you only drop 2 or 3%? Is there value to that? Because we might know of certain areas to reduce the risk. You might not lose as much. I would argue there's just as much value there, especially when you're in retirement, as there is, wow, I got 16% return. Well, that's great in the accumulation phase, like Sean said, but what do we do when we're not adding money to those accounts anymore, and it's preservation? So navigating those volatile times is just as valuable. And if you're watching this, maybe you've been a DIYer and you want more time on your hands, maybe you don't even know where to start, or maybe you're saving money, you don't know where the money's supposed to go, or maybe you want to retire in 6 months and you don't know how you're going to do it, you just want to do it. Well, it all starts by having a conversation with us. You can call the number below. We can do a what we call our complimentary financial compass review, where we find out what your goals are, what's your timeline, what kind of assets do you have, is legacy important, is reducing taxes important, maybe all of those things are important. We'll just call the number below, we'll set up a time to talk, and we'll see what value we can potentially bring to the table for you.
Wonderful. Scott, Sean, thank you so much. To our viewers at home, that number to call to schedule your complimentary financial compass review is 888-970-4685. Or if you'd rather connect online, we've got you covered. Simply pull out your smartphone and you can scan the QR code that you see there in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Bulman Wealth Group will reach out to connect with you to schedule your complimentary financial compass review that way as well. Don't go anywhere. When we come back, we're going to continue this conversation around the advisor advantage, and you're not going to have to just take our word for it. What does the data say? You're not going to want to miss what Vanguard revealed about that subject right after this.
Successful retirement to me is someone who doesn't have to worry about where their next paycheck's going to come from, where the income's going to come from. Are they going to run out of income? Are they going to run out of money? Are they going to meet their financial goals with respect to maybe they want to leave money to their children? Maybe they want to leave money to a philanthropy or a university.
Being able to wake up and know the day's an open slate and not having to worry about things. Or say someone's going on a trip with family, they're going to the beach, and if the headline says, the market's down again or something, they're not concerned. Bulman Wealth has my back here. We've got a plan in place. My portfolio is set up in a way that concern is not there.
All the pieces fit together like a puzzle. When that all fits together and you can see the peace of mind that gives families, that is a successful retirement. Did you ever think your own retirement would be shared with our government? It's true. Your traditional 401k, IRA, pension, or similar retirement accounts are in partnership with the IRS. Simply put, they want their tax dollars, and you have them. With our latest tax calculator, you can plug in your own number while sitting at home. To find out what your future tax liability might be, scan the QR code or go to bulmantaxbill.com.
Welcome back. You're watching Your Financial Compass, brought to you by the team of Bulman Wealth Group. I'm your host, Kristen Oakley, and I'm joined by financial advisors Scott and Sean. Today, we are talking about the advisor advantage. We're asking the question, does working with a financial advisor potentially add value to your current financial situation? Well, the good news is you don't have to take our word or our experiences in this industry at face value. There's tons of data to back this up, and that's what we're going to get into now. You know, I think that there's been so many studies recently that have asked this question, does it make sense to work with a financial advisor? Does that add value? Especially because we live in a do-it-yourself world, right? Where a lot of people have been doing it on their own. But again, that question is, should you really be doing it on your own? And so let's talk about some of that data and what it's revealed.
Well, I think choosing an advisor is very important. I mean, in your lifetime, ideally, you're only going to work with a couple of advisors, maybe one or two firms in your lifetime, and you want to pick the right one because breaking up with an advisor is kind of like breaking up a relationship, or it's almost like having a divorce. It can be traumatic. So I think going into it eyes wide open, doing your research is really important. And there's a number of criteria that we advise clients to consider when they're looking for an advisor. The first one is, the type of advisor, and there's ways to distinguish advisors. One is, how are they getting compensated? Some are fee-based advisors where they get paid based on the assets that they manage. And that fee should include financial planning, should include legacy planning, proactive tax strategy planning. And then the other is commission-based compensation. That's where the advisor gets paid only when they sell something to you. At Bulman Wealth Group, we're fee-based. We incorporate planning and all that into a flat fee that we charge based on the assets. The second area is where the loyalties of the advisor lies. And the first differentiator, are they a fiduciary or are they really ruled by what's called the suitability standard? The suitability standard is, is each individual investment that they sell, is it suitable or appropriate for that person? That generic person based on their age and their income and their investment horizon. Whereas the fiduciary is a higher level of standard where by law, the advisor has to be loyal to the client. Their loyalty is first to the client above all else.
It's a legal and ethical obligation to always put the client's best interests first above anything else, right?
And I'm proud to say that at Bulman Wealth Group, we are fiduciaries and we take that responsibility very seriously.
I think transparency is a huge thing in many facets, but definitely with this, in terms of, think of something like fees. There's so much murkiness when it comes to that. A lot of times we'll be meeting with someone and they'll ask, say in that first meeting, well, what are your fees? I'll tell them, Or sometimes I'll answer a question with a question. It's like, we'll get to that, but what fee are you paying now to your current advisor? 100% of the time they don't know.
Right.
Because they've never been told. They've been a reminder, or they never told me.
Right.
Well, how do you want to know what fee we would charge? You don't even know what fee you're paying because they never discussed it. You don't want that surprise, like, I'm paying how much? You want that known up front.
Well, and can I add one more
Yeah.
thing to that? Is I think there's a difference between talking about fees and talking about total cost you will incur.
Yeah.
Meaning, maybe someone knows the management fee,
Yeah.
but they have no idea about the internal fees and costs of the investments that their money is being held in. That's why you always want to ask, what's the total cost I will incur from working with you versus what's the fee?
Well, yeah,
right?
even if you have a 401k and you don't have an advisor, guess what? Those mutual funds you're invested in, they have fees too.
They're not
there's,
free.
There's always a
Yeah.
cost.
Yeah.
And as it comes back to, as Sean was kind of referencing, there's a personalized element. We're fortunate enough to be in a position as a firm where we don't have to work with everyone that comes knocking on our door. We want to help as many people as we can, but we want a long-term relationship, a partnership with someone, and there needs to be mutual trust. And I think just having a personalized element to it and being selective on who we work with allows us to just pour into it. We know our clients, we know their kids, we know their grandkids, we know their scenario because we're invested in this too, not just in a sense of money and what we're earning. It's like we're invested, we know what's happening, and I think there's all these intangibles that it's hard to quantify like a number. It's like it's about a lot more than just, like, as you said, what is the management cost? There's so much more that's coming to the table.
For sure. I know one of the things that you all always talk about at Bulman Wealth is the fact that you do life with your clients. It's a family atmosphere, and the key word is having a partner. Explain the difference between just working with an advisor or having a partner with your financial life.
Well, familiarity is really important, and that comes with time. You have to spend time with to build a relationship takes time. And I think one question to ask a potential advisor is, how frequently will we meet?
Exactly.
And will you put that in writing? Will you put that on a schedule right now for the whole year? We meet so many people that they had a really good relationship, a lot of communication and contact up front, but then as time went on, it dissipated, and you can't build a relationship. You certainly can't make a feeling of being a partner or being part of a family with someone if you're not willing to put in that time.
And communication is so important, as Sean was saying. It's like, several formal meetings a year, which I had my quotes written backwards, several formal meetings a year, but telling them, hey, we're an email away. Or we do client events all the time where we invite clients in, bring friends, bring your kids. We just did one at a baseball game, River Cats game recently. We send out newsletters every other week. Sean and I have a radio show. We have a podcast. We have all kinds of different
touch points,
guides on our website, but there's touch points in our staff knows our clients. So it's just like, you're not just calling in and like, who the heck is this? Like, everyone knows who we're working with, and that I can imagine if I was on the other side of the table, it would mean a lot.
Yeah, for sure.
And one final great question around that is, are you willing to work with my children too, right? I mean, your children are one of the most important assets that people think. Not that children are assets, but are you willing
We're in
to
relationships.
They are expensive.
Are you willing to work and educate and teach my children, even if they're adult children, how to manage money and make good financial decisions responsibly?
For sure. Well, I know we are going to get to that Vanguard study as well as we talk about this whole conversation of the advisor advantage. You've given some really good things for folks to think about in terms of questions to work with a financial advisor. I know a lot of what you do is offer second opinions.
Yeah.
And for some folks watching, they might have a great relationship with their financial advisor, but they just want to know, hey, am I on track? Am I doing everything I need to be doing, could be doing? What does the conversation look like if someone comes to you guys for a second opinion and everything is in fact on track? How often is that the case?
It happens sometimes. And that's the thing is, like, if it ain't broke, don't fix it.
Right.
Not many. Sometimes that's true. We've had people, hey, you don't need my help. If they have an advisor or not, sometimes they're just like, you're fine. There's no sense in it. And I think that it's refreshing in a sense too. Like, you might call into our office, talk to Rachel, someone on staff, as she's getting to know someone to set up a time to speak with one of the advisors. She might say, hey, I don't think we're fit, or I don't think you need our help. And how refreshing is that?
Yeah.
We don't need to jam anyone in anything. We don't need to put a square peg in a round hole or whatever,
Right.
however that saying goes, and
Yep.
there's certain freedom to that from our side and also from the folks that are calling in. So if you have a great relationship with, I'll put it this way, if you call out for a second opinion, I would argue there's a reason you're doing that. Something's amiss in that current advisor relationship, or maybe you're not getting the communication you want. If that is the case, or you just have questions about finances, maybe you've never worked with an advisor and you're kind of afraid, or you don't know where to start, you can call the number below. We'll pop it up here on the screen in a second, and we'll set up what we call our complimentary financial compass review, where we have a discussion, see where we can help. There's a number, and just begin to find out what your situation is, or you're not getting that communication, or maybe you just want an advisor to help with the management of your portfolio. Maybe we're not your people, but we can't figure that out until we have discussion.
Exactly. It starts with that conversation. Again, this is for no cost, no charge, no obligation. It's simply an invitation to have a conversation to see, are there any gaps in your financial plan? Are you on track to reach your goals? And if not, what are some ways that you can be on track? And the team of Bulman Wealth Group would love to walk you through that. Again, to schedule your complimentary financial compass review, all you need to do is call 888-970-4685, or if you'd rather connect online, simply scan the QR code there on the bottom right-hand corner of your screen. We're going to get to that Vanguard study and what it talked about when it relates to the advisor advantage right after this.
The team at Bulman Wealth Group is exceptional, from our advisor team to our service team, which is, I think, second to none. But it all revolves around the idea that our clients are vitally important.
One of the ways I feel like we differentiate ourselves is we want a relationship with our clients. And I really learned that from Chris. Is there's so many dollars and cents and all this information to know, but at the end of the day, it's got to be a trust and a like, because we're partnering with somebody. So I want them to think a trip to see me is not a trip to the DMV or to the dentist, but it's just being able to share in the good times and be available to be a resource in the bad times too.
Our clients are our friends. I really view them as part of our family because we go through some pretty significant life events. So it's really being a partner with our clients through all those life events and through the life journey.
As Americans, we strive for better. From a better house to a better career to a better life for our kids. Better has become the American way. But when it comes to your retirement, what does better mean to you? More income? A flexible lifestyle? Better solutions? A better retirement begins with a plan. To get your complimentary written financial plan, call the number you see here. You only retire once. This is your opportunity to plan for better.
Welcome back to Your Financial Compass, where today Sean and Scott and I are discussing the advisor advantage. Does it really add value to work with a financial advisor, especially in today's economic climate where a lot of folks are doing it themselves? And we've referenced a Vanguard study we want to share with you now. And I know, Sean, you're going to kick us off and share some of the data, but one of the things I think is so fascinating about Vanguard is they are one of the world's largest money managers, predominantly used by do-it-yourself investors. They had no skin in the game, so to speak, of why, what the results showed, which was they were proving that working with a financial advisor can add value. So talk about what this important study showed.
Well, to your point, Vanguard's got a lot of respect and credibility in the marketplace. And that what they saw happening is that they were publishing their returns. Let's say the S&P 500 index fund had done over a long period of time 9%, but their clients were only getting 3, 4, or 5%. And they dug in. Why is this happening? That our clients are getting significantly lower returns than the index, because the index, by definition, is passive investing. Put the money in and forget it, take the emotion out, and you should enjoy those larger returns. But what they found is that by those clients who did work with an advisor, on average experienced a 3% or more better return by working with an advisor. And what they found is the advisor brought 3 things to the table that they were able to quantify. One, behavioral coaching, we talked about that a little bit, taking the emotion out of it and providing perspective. The second, tax strategies. Even when the market's down, it's a good time to make some really proactive tax loss harvesting, Roth conversion strategies that can save a significant amount of money. And then the last is building a financial plan, which helps clients look around corners, anticipate things, events in their life, and just overall make good financial decisions that tend to make clients more money over time.
Yes, thank you for detailing that. And I think what's so fascinating too is that 3% return more was even after the fees that have been paid, right?
right.
So that's massive when
Yeah.
you think about that. I mean, that can add up to be significant amounts of money.
And you think about it too, if we want to quantify beyond the numbers, sometimes we'll say at our workshops, hey, we want to figure out what you're looking forward to. We also want to find out what keeps you up at night.
Yes.
And we can help you plan for those things you're looking forward to, the bucket list items, but also those instances that come up where there's been too many times to count where one person in the family, say it was the husband, was managing the finances. And they had a concern like, hey, when I'm not here, I'm afraid, or say it's the wife that's managing the finances, but generally there's one kind of point person. What if they're the first one to pass away? And we've helped our clients navigate through that to be like, hey, when I'm not here, I know this group is going to navigate you through that, and there's so much peace of mind that comes along with that. So trying to plan for those beyond just what kind of returns do we get, there's so much more to it than that. So it's we want to keep that in mind as well when we're trying to analyze, do we need an advisor or do we not?
So much of the value I think that you all have shared today is in that relationship, right? It is a relationship. It's an ongoing thing. It's not a one time and then you're done. This is ongoing. This is why you do life with your clients.
Right.
Yeah.
I was talking to a gentleman who is still sore and bruised over 2008, 2009 when the market went down 50%. He got out close to the bottom and he was telling me it took him years, one, to get back, have the confidence to get back in the market.
Right.
And then when he and I were talking in 2020 during COVID, he said, if I were working with you guys back in 2008, 2009, I would have significantly more money. Because you would have prevented me from making that decision of getting out of the market.
Yes, for sure. Well, what you do is valuable, and I know we're excited for more folks to connect with you as a result of today's show. So if this has resonated with you, we encourage you to reach out and schedule your complimentary Financial Compass review today. 888-970-4685 is the number to call. Be safe, be happy, be blessed, and we look forward to being back with you next time here on Your Financial Compass.